Hello everyone, great to have your company on 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV. I'm James Preston and you're watching The Buzzing Trends. In today's show, we'll be taking a look at how 3 ASX tech stocks have been creating a buzz. And in our first segment of the show, we'll be taking a closer look at how COVID-19 has impacted the tech space more broadly. And in the second segment, we'll take a look at those 3 tech stocks that benefited the most from this shift and delivered some great returns. Now, the pandemic has forced a huge shift in the way work is conducted. With an ever-increasing reliance on technology, similarly, stay-at-home orders have meant people are now spending more time streaming and also gaming. Technological adoptions like artificial intelligence, cloud computing, blockchain, Internet of Things and data science trends that were once perhaps deemed laggards now appear to be integrated across various themes. Lending businesses, asset management and insurance players are some of the leading financial areas under the spotlight for rapid adoption of digital technologies. The fintech space appears to be sitting on a gold mine, with buy now, pay later companies experiencing a surge in the merchant and transaction volumes. It's creating yet another opportunity for technology companies to disrupt the business dynamics in a largely conventionally run sector. On the other hand, the investment banking space is also embracing financial technology and embedding them in their core functions, including financial asset management, merger and acquisitions, advisory and also risk management. The same can be seen in the tech space. One of the challenges facing the tech sector is the burgeoning bandwidth demand that could spark unprecedented challenges for high-tech companies offering remote video streaming services, conferencing services and also online gaming. The other challenge for fintech businesses is data privacy, as digital transactions are highly prone to cyber attacks. Nonetheless, companies are pouring millions into digital transformation initiatives. All in all, it's how firms refine their transformation objectives, evolve from the lessons learned from the pandemic, and review their broader strategic agenda, which will place them well in advance. Alright, time now for a very quick break on 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV, and in just a moment we'll come back to take a look at 3 tech stocks that are showing promise on the ASX.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly,
Apart from tracking the daily market charter.
be on top of the latest news and announcements.
With 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV.
Tune in to get the latest information,
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news.
With 𝐊𝐚𝐥𝐤𝐽 TV.
Welcome back, James here live from 𝐊𝐴𝐥𝐤𝐢𝐧𝐞 Studios in Sydney for the Buzzing Trend Show. And in this edition we're taking a look at tech stocks that are showing some promising signs moving forward. The first company on our radar today is Pointerra, which has recently bagged multiple projects worth 2.1 million Aussie dollars. The ASX listed company has been making significant progress in the development of its digital asset management platform, Pointerra 3D, as well as its strategy to pull in greater investments from its existing and new customers. Pointerra's large power utility clients have awarded some new projects, separate from the ongoing enterprise deployment of the company with these customers. To get the breakdown of the new projects, Pointerra has got 4 projects worth 1.55 million Aussie dollars from Florida Power and Light and Next Era Energy. It's also received a 6-month vegetation research and development project from Pacific Gas and Electric for 250,000 Aussie dollars. Additionally, 2 more projects worth $260,000 for global Tier 1 miner Grid Vision fell into Pointerra's kitty. Pointerra has delivered around a 12% return to its shareholders in the past year. Moving on now to ARCTIS, which has recently acquired CipherPoint Technologies assets. ARCTIS is a global provider of innovative software solutions for secure collaboration of sensitive data. The company is set to acquire select assets of CipherPoint's software division, With that said, the assets being acquired include the customer base, technology and also the European operations. The software division includes two segments, the first being protection of intellectual property, which is an advanced SharePoint on-premises data encryption solution. The second segment being about data discovery and a classification platform. Through this acquisition, the InfoSec provider will gain a growing suite of data-centric and zero-trust architected platforms and products that will help to boost Microsoft customer environments for on-premises, hybrid and also cloud deployments. Overall, the acquisition will help the company to record higher annual recurring revenues. 𝐼𝐶 has delivered around 19% returns to its shareholders on a year-to-date basis. And moving on to our final of three tech stocks to take a look at, and that is Dubber Corporation, which acquired cloud-native AI-based products provider recently. One of the world's leading service providers, Dubber has acquired the Brisbane-based technology group Notive. Notive is a developer of cloud-native AI-based products, which are designed to turn meetings into transcribed notes, signals, action summaries and more. Notive's expertise in artificial intelligence and data science will enable Dubber to create action items automatically from notes on every call. Dubber is aiming to build revenue-generating, value-added capabilities and services for its global customer base. And furthermore, the company is driven by its strategy of amplifying organic, annualised recurring revenue with strategic acquisitions. With this acquisition, the company is eyeing significant growth in its business value, and Dubber has delivered around a 129% return to its shareholders in the past 12 months. So the tech market continues to be driven by a mix of socio-economic factors in the backdrop of the pandemic, meaning that investors need to make prudent calls while cherry-picking lucrative stocks with strong fundamentals, robust balance sheets and a very intelligent strategic outlook. I hope you found today's show very informative. Stay tuned for more news and updates live on 𝐊𝐶 TV. This is James signing off for now.